Hey folks, welcome to 9 to 5 to Freedom. I hope everybody's having a great day. Today's video, we're going to talk about what we got on week 21 in dividends, talking about the market situation, and I'm going to give you an update of my portfolio and the changes that I've made. So glad you found this channel. My name's Alex, and here we document or I mess around with high yield dividends in order to build a portfolio that will one day replace my 9 to 5. So glad you joined us. Let's hop right into it, folks. First things first, I want to give it a shout out. Today is May 31st. My goal for this channel was to hit 100 subscribers, so thank you for helping me reach this goal of 100 subs. It's a monumental step. I started this channel from scratch. I didn't tell anybody, none of my family members, nothing about this, and I just want to see how I can build this channel documenting what I'm doing. So if you're new here, thank you for joining, and let's hop right into what we're going to talk about. So first, okay, the market, we'll just take a look at what happened this week. Looks like we overall were up in the course of the week, not by much, about 1%. A little bit choppy there on Friday. Started out high, went down, and went back up on the close. So year-to-date S&P 500 is near 0%, negative 0.05% year-to-date. And in our 6-month, we're looking about down 2.44%. So obviously this was due to the tariffs. Now this week, what we had was a potential case against the president's tariff wars. So we're going to see how that plays out, what's going to happen out of that. I know when the news hit the aftermarket, started to climb, and there was a lot of hope around that, but really Friday we ended pretty flat. So take a look what we got in the news here. Let's see. Yeah, so again, on trade wars, what's going on here? S&P 500 down 30 down, NASDAQ down, Russell 2000 down, gold is down. So we'll take a look at what's going on with Bitcoin. Bitcoin is slightly down from our all-time high of 100. I think we were 111. Take a look here. Yeah, we're 111,000 on May 22nd. So we're slightly dipping down. Now, if we look at a 5-year chart, so there's a lot of optimism about Bitcoin continuing to climb. I think we're going to see, in my opinion, it float around this a little bit above the $100,000 range. We might see a slight dip, but I feel like we are entering the newest low. And as far as Bitcoin, we have very little of it left to be mined. So at that point, it might take off. A lot of companies, as you know, are taking advantage of it and holding their finances in it. Companies like MSTR, which brings us into the next discussion. Okay, so MSTR is pretty much at all-time high. We had a slight pullback here at 369. We were at 416. But as you can see, it's closely mimicking what Bitcoin is looking like. So if that is true, if MicroStrategy is going to continue to mimic the Bitcoin price movement, that's going to help us with MSTY. And this is from YieldMax. If you're new to this channel, this is an epic high yielder from YieldMax that pays like 130% dividend. And this is going to lead us into the discussion of why I personally think that this is a buying opportunity. Okay, so we've seen YieldMax MSTY at this $20 spot only 3 times in its history. Okay, so the time of its release over a year ago, on the dip that happened back in September, and the recent pullback that we had due to the tariffs announcement. So we had a small climb to $25. We're back down to 21. Now you might see this fluctuate a couple dollars back and forth, but so far this is one of the best managed funds by YieldMax, and I really like what they're doing with it. Okay, so let's talk about the dividends that we got this week. Okay, so this is the tracker that I use for getting the dividends every week and what I'm getting from each single fund. When I started this back in January of this year, when I started this channel, I started out with a little bit over $12,000 invested. I tested it out for a few months, and then back in March of this year, I sold one of my rental properties and I dumped most of the proceeds into the market into these high yield dividends. So at the time I had, let's see here, 21 different funds that I was investing in. Now, as you can see here, there's some of them that are paying weekly, some of them that are paying monthly, and some of them that I've invested only in March that I haven't really tested out previously before that. So the ones in the red, FEPI USA, RDTE, Coney, CLM, CRF, and TSLP, I've actually sold all of these positions. Okay, and I had my reasons for it, and I've made a video about it of me really consolidating and trimming down my portfolio, because really what I was doing, I was experimenting to see how these are holding up, how they're doing on the lows, on the highs, what kind of dividends I'm getting, the risk that I'm carrying, all that kind of stuff. Okay, so I got rid of those and I spread the funds among some of the other positions. Like I said, that would be in that video. Now, what I did this week, okay, and this is what we're going to get into. I did another level of consolidation. Okay, so the ones that are, the text are in red, AIPI, SPY-I, QQQI, XPay, YMAG, and YMAX. I've actually sold all of these positions. I did receive a dividend miraculously from AIPI. I think that ex-dividend day was on the day that I sold, so I did receive $127 this week from that. I got $214 from XDTE, and I got a whopping $335 from QDTE. Now, why did I get so much from QDTE? Well, this is one of those funds that I've actually increased my position on. And I'll explain why, but if you watch my last video where I compare XDTE to QDTE, and I talk about how QDTE was actually outperforming XDTE. So I think it has to do with the mixture, probably with some of the funds that QDT is holding, more stock stuff that has bounced back a little bit better than the S&P 500 that XDT does the options on. So I was really happy with what I saw that QDT was able to produce, and the fact that it pays weekly. I decided to increase my position, and so my dividend for this week came out total to $676.91. So year to date, we are sitting at $13,304 that we received in dividends. Now, I do not do drip. I don't reinvest this money. I just continue to use some of these funds in order to pay down some of my debt and pay some of the bills that I have, to really test this out in a way that will be used in a retirement situation. Okay, so overall, this portfolio was about $186,000. I did some other stuff in there. I did some margin hammer strategy. I won some, I lost some. Right now, I'm kind of taking a break. I had a pretty rough week last week. I made some videos about that. The market's been a little choppy, so I want to stay out of that for a while until we see a little bit more of a bullish run in the market, I think. But anyways, so I've taken out a good sizable, and I don't have the numbers here, but I've probably taken out over, at this point, probably over $25,000 out of my portfolio from the dividends, from the margin hammer strategy, all of that combined. So I'll try to do a better job tracking what I pull out of my portfolio. But if we go over to my portfolio here, this is my new portfolio. Okay, now the Cambodian alarms will probably go off, and I'm going to justify why I did and why I did it, right? So this is the new plan, folks. Okay, I've tested all of these high yield dividends, and these are the ones that I have the most amount of faith in. Okay, we'll just hop back to what my justification was to get rid of these. Okay, so first off, JAPQ, compared to QQQI, compared to SPY-I, compared to XPay is totally pathetic. It pays less in dividends. It eroded much more. I wanted to close this position. I had like $20,000 in this. I thought this would be a safe play, but I was really not happy with it. Okay, so I got rid of that. Now, that leaves us down to SPY and QQQI. Now, I really like these two, and QQQI especially because it did better than the underlier, which was QQQ. It paid a decent dividend of like 14%. But that being said, there were funds that were doing a better job, and funds like XPay that were paying 21% dividend that would still beat QQQI. So I can always hop back into QQQI. I think for a more conservative investor, I really think SPY, QQQI, XPay, these would be very good picks. If you want to, let's say, not lose as much money and you're okay with not making a lot of these dividends, these would be very good. And again, this is not financial advice. This is just me doing my experiment. I think these three positions would play out fairly well for a more conservative investor. I'm a little bit more risky in this account, and I'll explain why, but I wanted more. Okay, I have ambitions for this year. I'm willing to risk this this account that I have in here. So I justified to get out of these positions and to spread some of that money into some risky plays. If I were want to go back to being conservative, I think I would be very happy with QQI and XPay. I think those would be some of my largest positions. Okay, so we're gonna hide that. So we sold that. AIPI. Okay, so this is one that has a bunch of different AI companies in it, and it's just what it's been paying in dividends is really lacking. Okay, I can get more in dividends from QDT than I could from AIPI, and QDT, in my opinion, is much more well diversified. So I sold that position. I was just it's a monthly payer. I wasn't really getting too much out of it, so I sold that position. I'm not saying it's a bad one, but it just the way it's been performing, I wasn't too happy about it. Okay, YMAG and YMAX. Okay, these were weeklies. These were down like 20% since I bought them. Obviously, I bought them at a higher time when the stocks were higher, but they just continue to erode. I think I want to move that money into something that has more of a momentum. So I sold both of these positions. Some people might argue that was dumb, but that's what I did. So if you think I was dumb, please leave a comment that says dumb. All right, so now this is what's left, and I'll tell you why this is left and what the plan here is. Okay, so I kept SMCY. Why did I keep SMCY? This thing is down, let's see, since I got it, 19.78%. It's down that much, but it pays a great dividend. Okay, so I don't have a huge position in it. I only have $4,000. I figure if it's going to continue to pay me, and last time it paid me was $310. So if it's going to continue to pay me $300 on its position, then I'm happy with it. Let it erode. We'll see. Maybe I'll just get my money back and then reposition it into something else. So this isn't like I'm not gonna dump any more money into it because I don't like it's flaky. Okay, I don't really believe in it. Okay, let's talk about BTCI. This is one of my favorite ones. It pays you dividends on every month, and it plays on the Bitcoin position. It's one of the few funds that's actually been in the green. I had it green as much as 10% for this year. So what I did is I increased my position in BTCI. I bought more shares of it, and I really think having a good sizable position of your portfolio in the Bitcoin space makes a lot of sense for me, at least. Okay, so then we got PLTY. Now, PLTY underlier is Palantir, and Palantir's been flying through the roof, but I think it still has a lot of momentum left in it. So let's just pull it up here. I'll just show you where the stock price is. Now, this isn't at its all-time low. So all-time high is 94, 52-week low is 46. So we are really dead center right now. We're dead center from the lowest to the highest. So this might not be the best buying opportunity, but I think it's a an average buying opportunity. So I increased that position. It pays a huge dividend of like 140%, something stupid like that. And last time it paid $769, and I only had like, I forget what I had. Oh gosh. I only had like less than $7,000 in here. I didn't have a lot. So you can look at my old videos where I have that position. So it's been paying really great, and I think it has momentum. I really believe in Palantir. I think it's going to continue to grow, and this might be a decent buying opportunity. Again, we might see a pullback, and maybe there'll be another opportunity to DCA down, but we're not buying at the highest, and I like the chart. Okay, it's upward sideways, so we're 25% all time since inception of fund at $52. So it's really dipped down only once below its start price, which was around the tariffs time, and it's climbed back since. So I think for me personally, I think it's a very good, decent position. Okay, next one is NVIDIA. Now, NVIDIA is obviously a little bit more risky because we've kind of seen it all over the place. If we look at the all-time chart, we're down 22%. Now, I think NVIDIA still has a lot of future behind it. I really believe in the underlier NVIDIA with what they're doing with AI chips, all that stuff. So even though we've seen some erosion since its inception at $21 or $19, this $15 might be a buying opportunity. Now it might continue to go down. Maybe it'll drop down to $10. I'm not sure, but I think I really like the strong underlier that NVIDIA is. So that's why I increased my position into NVIDIA. And last payment, it was $512. Look at that compared to the previous payments. Now, my position hasn't changed since March through May. I had the same amount of money in there. And you can see how much more of a dividend we received in May, which was really impressive. So I increased my NVIDIA position. Okay, next, XCT. I kept this one. This one was my largest position in my whole portfolio. I kept it. I didn't add anything to it. QDT, like I said, I did increase this position. And then we got MSTY. Now, we talked about Bitcoin, MSTR, all that kind of stuff. I think this is one of the key players, okay? I believe in it. You might think differently. If you think MSTY is a yield trap, please let me know in the comments. Okay, so let's talk about my portfolio now. All right, so this is what we got. We got 2,600 shares in Misty. We got 1,500 shares in QDT, 1,000 shares in XCT, 500 shares in Plady, 416 shares in BTCI, and 1,000 shares in NVIDIA, and I got 220 shares in SMCY. Now, I did end up taking margin, folks. I was hesitant to utilize margin, but I took about a 40% position into margin. And this being said, I think that percentage between 30 to 50%, I think it's a decent position that in case we see another dip, let's say a 10% dip or something like that, I think it will avoid you getting into any type of margin call. You don't want to be like in Cambodia. You don't want to take out 100% margin and then tariffs get announced and then you have to liquidate your portfolio. I think you got to be smart with it. So a small position like that would actually, should hold up fairly well. And I think, the way that I'm diversified, if you look at QDT, XCTE, we have, roughly, let's see, 27 plus 31, about 58, 60% position in all those funds. Okay, so that's 60% of my portfolio is in spread out among S&P 500 and NASDAQ 100. So I think that's a pretty safe bet. And then the rest, I got obviously the single ones that are more risky. Now, I'm willing to be risky because most of my money is tied up in something that's less risky, like real estate, and my 401k is very well diversified. So I figured I can be a little bit risky with this. Now, this video is getting very long, and I do apologize for that, but I just have a lot to cover here. So, so this negative, this is my margin position. I did take out 2,000 bucks that I needed to borrow, and this is what's great with margin because you can withdraw and your dividends will pay down your margin. Next week we're gonna have Misty payout, and it's gonna be absolutely epic. So that's gonna lower this margin position. Now let's hop over to the dividend view. So this tells me how much I'm expected to get in dividends. Now this number is absolutely bananas. Okay, so it's saying that I'm going to get $162,677 in dividends. Now this is if we don't get any NAV erosion, which we probably will. So we'll see what this will actually be. So what I'm doing now is I took a screenshot of this portfolio when I rebalanced it. I'm going to continue to take a screenshot every single week. I'm going to track all the money that I'm pulling out. Remember, if I need money, if I need to pay something off, I just pull it out of margin. And then when the dividends get released, they pay down that margin. I'm carrying about 6.375% on my margin interest, which I negotiated it. So it's not very high. I know you can get lower at Robinhood, and I've been thinking about maybe switching over to Robinhood one day, but for now, sticking with Fidelity. Okay, so that's what I got, folks. Let me know in the comments, am I making mistakes? Is this dumb? I appreciate your opinion. I'm going to continue to do what I think is best, but I like the engagement. Thank you, everybody, for watching. And yeah, we're going to track this. We're going to see if living out of your portfolio is possible, if this is a smart pick, or are we going to get wrecked? I'm not sure. Okay, but we're going to be raw. We're going to be transparent, and this is why you guys are here. So thanks for watching, and we'll see you on the next video, folks.